Welcome and hello and welcome and hello and welcome and hello and welcome. Bienvenidos. Good evening. Thank you for joining me on a somber, reflective edition of Un Poco Mas, the show where we give you just a little bit more. Thank you for joining us. Once again, welcome and hello and welcome. Today we are talking SMCI Super Microcomputer Incorporated. And if you notice that I'm speaking in hushed tones, it's because, it feels like a funeral. It's really funny, guys. It, I tried to sort of warn people this was going to happen. I didn't think it would be this big a drop because I had a pretty good sense of where the ER was going. If you read the comments, we're like, why aren't you doing a video? Why aren't you doing a video? I said, look, the ER is not going to be that good. And why is it not going to be that good? Because they're shipping units. They have a ton of orders, but they can't recognize the revenue yet. And Charles, Uncle Chucky, said basically the same thing. He's like, look, customers came back with revisions. We have to validate things, and we can't recognize the revenues until the job is completely done and dusted, put to bed. The fat lady has done her operetta and come back for an encore, and she is out having a cocktail with the rest of the band. So they're going to be extremely gun shy about recognizing any revenues early because obviously that's what they got in trouble before. And a couple of things, guys. I'm sorry, I'm just extremely tired, but people were asking me to come on and comment, so I'm just trying to do that. If you guys have any questions, any thoughts, I definitely try to. Travis, that was the whole problem. And I said this down in the description. Management, let me talk for the company. I can put this stuff in perspective vis-a-vis all the other public companies, all the history of public companies for my entire lifetime. The SMCI leadership team is incapable of framing the results in a favorable light for shareholders, for the company, for the future, for the direction, for the narrative. Frame it in the sense that you just grew the top line from 5 billion to 7 billion. You went from 7 billion to 15 billion. You went from 15 billion to 22 billion. You guys realize they almost hit, 50% year on year top line growth in that horrible earnings report. This is akin to the SoFi New Year's Eve massacre orchestrated by that little short, fat, bald mafioso over at KBW. So the stock drops from 57 to 47. It's a $10 drop, just completely pre-programmed in. I tell you, with 100 million trillion billion % fat guy certainty. The type of certainty that only comes with a nice set of man boobs, because you guys know I'm man boobing for fun and profit. And I was actually green today. Amazon went crazy with a ton of Amazon, Google, CRISPR came back. Guys, watch IOVA. Watch IOVA. They have earnings tomorrow. I just saw the filings. Both Vanguard and BlackRock increased their holdings in that stock in the most recent filings significantly, quite significantly. I think both about 10%, but I'll go into that if I have time. I just don't have time. And so I know Super Micro is on a lot, but so they were expecting, the analysts can make up expectations. And before the ER, everybody was saying, FactSet, consensus was about 5.8 billion, 5.85 billion. Then today they're saying consensus was 6 billion. So they made the miss bigger. And EPS estimate, 44 cents. They missed by 3 cents. This is the type of drop. Earnings should be negative to get this type of drop on like a one-time item. Or instead of 41 cents, you'd think they made, 11 cents. This is not the type of reaction you normally see to a 3-cent miss. And let me make another point. This is controlled fake price action. The whole day, the whole pre-market, the whole thing. This has been predetermined for weeks, if not months. But these are the numbers I was giving you. 2021, They're selling 3.5 billion. So this year they're expecting to almost 10x where they were in 2021. 1, 2, 3, 4, 5 years. 10x sales in 5 years. This is the year everyone is saying was horrible, going to 22 billion. But put the quarter in perspective, guys. Put the quarter in perspective. This is the second best quarter in terms of sales in the history of the company. And they have not been able to recognize any Blackwell revenue yet. They were at 4.6 last quarter. Their sales increased $1.16 billion quarter on quarter. And again, this is not Blackwell. Look at the estimates. They're saying at least 33 billion. Under 22 to 33 is more than 50% year-on-year top-line growth. Margins almost by definition have to get better. Look what happened here. This is when the last generation of the new NVIDIA processor came out, when the company just went crazy. 3 billion, 3.5 billion, quarter on quarter jumped to 5.35. And then you see it start to trail off when, you know, those processors become commoditized, the new generation's about to come out. There's so many good things happening that people just aren't really putting their finger on the pulse. You know, these processors that were restricted to China, they don't get those sales channels back open overnight, even though the Trump administration, you know, lifted the restriction on selling those processors that were specifically designed to be legal to sell into China. So they had to write those down. They can quote unquote write those back up. It's going to be a huge boost for the books if they're able to do that and, you know, sell through that quote unquote stale inventory. That's still perfectly good. I mean, the other thing that's just so compelling is they're able to do 22 billion and going on 33 billion next year with only less than 6,000 employees. Revenue per employee is almost $4 million. That's incredible organizational efficiency. So just instead of believing this narrative that the sky is falling, and besides, they actually made over $1 billion net income. You'd think with these results, you'd think they were just hemorrhaging money, going out of business, going bankrupt. They're cash flow positive, they're net income positive through all this stuff. And the company basically came out and said, look, we were hamstrung by all this accounting garbage. We couldn't, you know, finance the type of growth that we wanted to finance. So it is what it is, guys. I mean, last year was a mess, and it's all, what didn't you see? Look at what you just didn't see in the ER. No accounting scandal, no write-downs, no restatements, no big deal whatsoever. It's like it's all swept under the rug. And nobody's talking about anybody going to jail. Nobody's talking about anything being delisted. It was much ado about nothing, guys. Oh, Shanta. Thank you. This is meant to be a bit humorous. I'm trying to tickle the old funny bone, if you know what I mean. I saw Catfish doing a song about nutsacks. It was really good. It's really funny. Just disproves the everything is manipulated narrative. I don't understand what you mean, Travis. Can you clarify? Sorry, I can't read all the comments, so you probably made sense if you were like, if I could read what you were saying above, but no, this actually proves the everything is manipulated narrative, because I think they let the price go up to suck retail in the high 50s and then basically stop them out at 50 or 45 or whatever the case may be. I mean, otherwise there's no point in dropping it this much. And the other thing you'll notice is they were actually covering today. Which again is unusual. Or no, they actually increased just 100 shares. But yesterday they were borrowing 2.5 million, so you knew this was going to happen. Borrow fee is still almost nothing. Short interest has been, you know, dropping and dropping, as have shares on loan, utilization, cost to borrow, pretty much all the statistics associated with shorting a stock. So, if anything, if you look at this chart and then sort of look at what happened on the 1 day and the volume, this bull volume and this chart, and you think this dispels manipulation, I mean, this isn't how an organic sell-off looks. If you think what would have happened with a miss, just is this very small miss, honestly. And their second best sales quarter in the history of the company. when they haven't been able to recognize any of this new generation of processor. I mean, I don't know. I just don't see how this was that bad. The short positions, I was taking a look at this, but institutional ownership, you see, it's holding extremely steady. It's just, not going away at all. And then as far as the filings, again, I haven't really looked at these, so I don't know exactly what's going on. But yeah, these newest filings, you see, it's like mostly increases. I don't know. Most of these are. These are all, relatively small positions, Washburn. I've heard of a few of these companies, but not that many. But these are just kind of latest filings. Doesn't necessarily mean anything. Wolverine is probably short. Yeah. They have 75,000 calls and 1.4 million puts. So their puts are from 42. The call, I don't like their position. I think they really know what they're doing. Retirement System of Alabama, of course, increased 1.78%. Anyway, this doesn't really tell us a hell of a lot. Take a look at the short volume. Yeah, only a little under 40%. So that's pretty neutral. The last 2 days, they were shorting up from the top, as you'd expect, especially if they know they're going to just bash the living hell out of the stock. But you can go over to investor relations and take a look at the press release and the presentation. It's actually quite impressive. You look at their planned and everything they have going on in terms of worldwide expansion, Asia, Europe, the United States, like they are full send. They are not slowing down. They are not afraid of the future. They are creating the future. They are winning the future. Uncle Chucky and SMCI have these, these organizations dedicated to standardizing this entire field. They're not just pushing this company forward. They're pushing the entire industry forward. Supermicro is a critical player, in the AI and the data center landscape. And they're shooting to pick up like 30% of this business over the next year. And there's plenty of it to go around. And Supermicro has tons of advantages. Time to market, cost, density, cooling. I know HPE says they have more experience, but it can't get the job done. They're shooting blanks, dude. I don't know. I don't think they can get it done. This is essentially exactly what I'm talking about in terms of the manipulation, the illusion of a miss. You guys know Yanis Sorompanos. He's really smart. I'm probably, mangling his name, but if you look at, let's see, what was I doing? Sorry, I can't figure out. Trying to get back to the SMCI page. Oh, there you go. So yeah, these are similar articles. SMCI tanking 17% is our buy signal. This is Tech Stock Pro. Supermicro Computer, the illusion of a miss. Supermicro Computer, earnings aren't as bad as everyone thinks. This gets an upgrade from the techie. But this is just the one I want to take a look at as representative. The stock dropped on the illusion of a miss, guiding for 33 billion versus 29. Everyone was expecting next year they're going to do about 30 billion. So they're saying at least 33 billion. It's like 10% above what everybody thought, but they're misjudging it. This is exactly what I'm talking about. They're misjudging it against a vague $40 billion comment. This is a great lesson for management. Keep your stupid trap shut. Don't throw out huge numbers and set giant expectations. Take a lesson from Anthony Noto. The guy sandbags all the time. And it took a while, but, SoFi is headed in the right direction because they built the right base. They didn't pump the stock. Don't come out and shout 40 billion if you're not going to hit anywhere near 40. And I know the landscape has changed and all these things have happened, but seriously, shut up. You are killing us. You're feeding into this narrative that the company is somehow crashing and in trouble when your company is growing the top line at 50% every year. And 2 years ago, you grew the top line at 100%. These are numbers that would make Palantir blush. Nobody grows at these rates. And their margins are going to get better. This is basically what he's talking about in this article. They have to get better. It's the same exact thing that happened last time. It's the same thing management talked about on the last earnings report. This is the very, very bottom end of these margins at the very end of the last processor cycle. So I'm not going to go through this whole article, but I encourage you to read it again. It's over on Seeking Alpha. It's been, positioning towards the signal played out in part with the stock 27% higher, excitement about AI, H2 NVIDIA Blackwell ramp. Following earnings report, SMCI is down over 18%. A typical overreaction in our view, precipitated more by short-term compression of margins, any deterioration of fundamentals or end demand. Yes, Q4 margins were thin and EPS guide is flat. The margin compression was fully anticipated in our earlier thesis analyzed in April, which highlighted SMCI's deliberate shift toward high-volume, low-margin models as it scales from a niche server vendor to a full-stack AI infrastructure platform. Investors, though, are missing the forest for the trees. Supermicro is what I'm talking about. Investors are completely missing it. Investors aren't missing it. It's price fixing. It's set up in advance. They didn't care what the ER said. I'm telling you, this price action was, even if they said it's going to be a beat, even if they sold 5.9 million in the morning, everybody changed the consensus to 6 billion. So there would have been a miss. If they sold 43 cents, all of a sudden the consensus would have been 46, 47 cents. I'm telling you, these goalposts are always moving. It's complete nonsense. Okay, so investors are missing the forest for the trees. Supermicro guiding 50% growth year on year confirmed its long-term thesis of operating leverage over the long run. EPS deterioration is correlated with front-loading costs, inventory accumulation, and the cadence of orders, not weakening demand. This is critical. A supply reverts towards normal for GPUs and installation of GB200 and about to commence in the Q4 2025 amount, margins, and storyline for SMCI can reverse in the same instance. When market reacts to sentiment, set of direction. The post-earnings Supermicro decline appears more driven by flawed expectations rather than weakening performance. If you control the narrative, you control the price action. Okay, it doesn't matter if the narrative is true, but you have to be able to see through the bullshit. You have to be able to, because it's thick. And you're going to step in it and you're going to dump low and you're going to play right into the short's hands, in my opinion. Like, oh, you talk so much about, look, it's shorting options. It's all, two sides of the same coin. It's all market makers doing everything they can to take your money. And they'll do it any way they can. And they're going to win. They always do. You're going to sell the dip and you're going to smell the rip. So 2026 revenue guide of at least 33 billion outpaced expectations. This was incredibly good guidance from 22 billion this year, guiding for at least 50. Think about any other company of this size, of this scale, that guides for 50% top line. It's more than SoFi. It's more than Palantir. This was a really, really, really good ER. In this horrific year that they were hamstrung by this Hindenburg and everything else, they still made net income over $1 billion. You'd think from this reaction, they'd be like on their way to bankruptcy and losing money and, trying to get debt, when in fact, they just got these really positive financing deals. They just got this factoring deal to sell their receivables, at my understanding is quite favorable terms. I mean, they are funding hypergrowth. What are people not? This company is not priced like they're funding hypergrowth. Yes, because the margins right now are low. But again, as you go into the Blackwell ramp, the margins are going to improve. It's 100% certain. It's 100% certain. They're going to get those blended margins back up 14, 15, 16, even 17%. Ask somebody who knows what they're talking about. Ask a bald man. They're generally smarter, because they have to have good careers and fancy cars to pick up chicks. So they're not doing it with their great hair. They're not doing it with their manageable to undersized wings, that's for sure. They're doing it with good old intellectual capacity, good old brain power. The brain is the biggest erogenous zone besides the penis. Oh, this show always devolves into genitals. Usually doesn't take this long, but that's how it goes. Oh, I got an invoice from a proctologist. I don't think I've seen him. Just take me out to dinner first, you know what I mean? You know what I mean? Know what I mean, Doc? Know what I mean? A line from Fletch. Using the whole fist, Doc? Just relax. kind of name is Babar? Children's books. Let's see. So I forgot what I was talking about, guys. I almost fell asleep. Gapping out. Ugh, where's Marco Guzar when I need my dabs? Okay, so the building block thing, they're talking about hyperscale, install rack scales, pre-validation infrastructure, much less time. These aren't hypothetical systems. SMCI produces 5,000 combined total racks a month. And this just goes on and on and on. It's a solution that not just grows margins, but locks customers deeper in, from GPU chassis, chilled door coolings, power sharing units, battery backup, software-defined orchestration, building stickier customer approach with wider wallet capture. Most importantly, this sounds for like backbone or building block system, I never can remember, is a current revenue stream, not hype for the future. Margins compress. This is the critical thing. Margins compress today, expand. In spite of steady revenue growth, a step down margin caught short-term investors off guard. Non-GAAP gross margins dropped to 11.2% from 14% in fiscal year 2024, with Q4 going down at 9.6%. It was caused by a shift in product mix, hyperscaler versus enterprise, high component costs, and timing mix matches. Even off a decline in enterprise value from 42 to 36% Q on Q, OEM and hyperscale revenue jumped 63%. A sign initial low-margin AI infrastructure deals are gaining traction. These hyperscale implementations will ultimately have post-development service and infrastructure margin upside. In fact, operating leverage for SMCI is reemerging modestly. Q4 non-GAAP operating margin increased 0.3 points to 5.3%, 5% Q3. Under pressure on the gross margin. Free cash flow reached all-time quarterly high of $841 million, with a net cash at $412 million, affording the company flexibility for reinvestment without external capital. Lastly, margin unlock arrives in the form of this, again, building blocks that expect management to contribute 20 to 30% of revenue in summer 2026, with higher blended gross margins for layers of integration, service, and deployment. Done right, this gets blended gross margin into the 14 to 17% range within 6 to 8 quarters. So this is a huge improvement. And remember, in the next 4 quarters, they're going to increase sales 50%. And think about what that means, because they only guided for, top line for 7 billion next quarter, 6 to 7 billion. So say, you take the midpoint, whatever, say even take the high point at 7. And you subtract that from their low end of their guidance at 33. They didn't give a high end, but they said a minimum. So I'm going to call that a low end. Whatever. I make this up as I go along, and I'm a big, fat douche. So I'm going to do what I want to do. I'm going to do what I got to do to get the union back. I don't think you should do that, Jimmy. I think you're special needs, Fitzy. I ain't going to listen to you. For the working man, the International Brotherhood of the Teamsters. You ever just get into Hoffa and you just can't turn it off? That weird makeup thing he's got going. Just weird. Great movie, though. Again, Danny DeVito. Just can't get enough. Can't get enough DeVito. Highly underrated actor, Danny DeVito. Anyway, so I don't know what the hell I'm talking about. Although operating execution is fair, there's still concern with respect to their capital raising strategy. And this is what people are worried about: dilution, debt, all this type of thing. It issued 2.3 billion convertible bonds that can dilute equity by 7%. I would worry a lot about that if they weren't growing the top line of the company at 50% year on year for the last 2 years, and 100% before that. Again, you're fueling hypergrowth. If there's any reason you want to take on debt or dilution or both, it's growing a company like a wildfire. So, you're going to have to raise money for this type of growth one way or the other. And quite frankly, I don't think that deal at 2.3 billion convertible bonds, 7%, I don't think it's as bad as everybody thought. Now, that one guy, Best of Us Investing, he says this company is the worst thing since a, big diaper full of diarrhea. And I respect the guy. He's a nice guy. He's a very smart guy. He's one of the first people I remember years ago talking about what a great company CRISPR was. That was before the big fall, but I happen to agree with him. He's just a really smart guy, but he hates SMCI and he hates their financing and he hates their accounting and he just hates their guts. So God bless him. He's entitled to his opinion. Salud, health and happiness, amigo. A big hello from the whole un poco mas familia, you old turd. I'm just messing around. So they also secured a 1.8 billion non-recourse. This is a factoring deal, an innovative but aggressive move toward unlocking cash without. I love this. I'd rather discount those receivables, and take a little tiny bit of a hit on the margins, a couple percent, even 5%. Not a 5% of their margins, but 5% of those aging receivables that maybe they wouldn't have collected 100% on anyway. Because everybody thinks everybody pays all their bills in the corporate world, but that's just not the case. You do have a certain amount of bad debt that just comes no matter what. You have to end up writing off. So, so they secured that facility. These plays suggest a company with high working capital needs in a supply-constrained, high-demand world. It's not the problem of insolvency, but the potential for repeat financial interfering descendants of free cash flow falters. But if Q4's historical $864 million operating cash flow, better inventory and receivable turn, DSO falling to 40 days indicates cash flow quality is enhanced. Assuming supply for GPUs reverts to its normal levels and ramps, this funding risk will reduce significantly by H2 2026. You see the graph here. Margin volatility, GPU timing, customer reliance. I'm not going to read this section. You can read this for yourself, but it goes on to basically talk about how things were deferred and how that's, coming back online is close coupling with product cycle NVIDIA, mission of GB200, even Q4 earnings when expected earlier, hints a possible timeline subject to the partner delays towards transition new gen kit. They're going to make these sales, guys. It's just, it's a question of, delayed gratification, I guess. Is targeted at levels of H2 fiscal year 2026 can put at risk the revenue deferrals. Sorry, I can't read them. My brain is going completely south. At 9.6% of non-GAAP gross margin in Q4 fiscal year 2025, the company is highly sensitive toward customer mix changes, input costs, along with duties. Yet another hyperscale-driven deployment spill can maintain gross margin subdued unless compensated with incremental gainers from building blocks along with enterprise service stacks. Takeaway: Supermicro's 15% plus post earnings, I was more like 20%, is a story of dislocation, but not a fundamental miss. A $33 billion revenue guide, along with ramps for DCBBS adoption, besides a Blackwell-driven tailwind for H2, keeps the setup highly favorable. Margin woes represent more transitionary rather than structural challenges. For longer-term investors, it's a once-in-a-life second chance entry with the rack scale core of AI infrastructure. Whew. What do you guys think about that? Let me give you, I talked out. I think I bought, I bought a lot of shares today on the dip. Sorry guys, let me take a look at what's going on here. Okay, guys. I actually have to run, but I was wrapping up anyway. So let me just very quickly do this. So the stock moved from 28, 29 up to 62. It's like 110% move, and then it just retraced back down to 47. So that's a $15 drop. So you have a $34 increase followed by a 15. I always look at retracement kind of routine. 30, 40%, sometimes even 50%. So retracement of that move of 40, it's not, anything to worry about too much, but it's the fact that it all happened in one day is a bit disconcerting. But I see this as long as the stock holds on to about the 43 area, I think it'll move back up above this. What we don't want to do is get stuck back down in this channel on which we were sitting in, for the better part of a year with a little bit of variation here and there, but we definitely don't want to drop back down here. My worry is if it drops down below 42, it's probably going to go back down to about 36. And then I think it'll start to recover from there based on the fundamentals. But that's what the technicals are telling me. Remember, my crystal balls are very musty and often wrong. So it's SMCI, guys. I bought the dip. I think it was all manipulation. I think their global expansion is there. The revenue growth is astonishing. I feel that the margins are going to improve. And even if the margins don't improve at 10%, I mean, if you're growing the top line at 50%, your profits are still going to increase by 50%. And if you're increasing the top line and the margins, it's going to be even better. I think in a couple of years, everybody's going to completely forgotten about the accounting thing, and this company is going to be doing a massive amount of sales and profit. And patient investors who are not fear-based are going to be handsomely rewarded. That's my opinion, guys. Take it for what it's worth. A penny's worth of free advice. Anyway, guys, thank you for watching the show. I really appreciate it. It is un Poco Moss, the show where we try to give you just a little bit more. Appreciate it. Peace. I'm out.